Hello students, in present video I am going to explain about bills of exchange second problem. I am taking this question from Pankaj publications book. See the question. Amar draws a bill on Bharat for 15,000 rupees. Bharat accepts the bill and returns it to Amar. Amar endorses the bill to Chetan. Chetan endorses the bill to Deepak. Deepak discounts the bill with the bank for 14,800. Pass journal entries in the books of all parties, assuming that the bill is honored on the due date. This is the question. Important points of the question roughly I wrote here. See, Amar prepared a bill on Bharat. So Amar is drawer, Bharat is drawee. Bill amount 15,000 rupees. Chetan is a creditor to Amar. Previously, Amar took some benefit from Chetan. Now Amar has to pay 15,000 rupees to Chetan. So instead of paying in cash form, this 15,000 worth bill, Amar transferred to Chetan. That is known as endorsement. So on endorsement, I made a separate video. Video link I am giving in the description box and in iCard. Amar is endorsing the bill now. Amar is known as endorser and Chetan is known as endorsee. Chetan has to pay 15,000 rupees to Deepak. Means Deepak is a creditor to Chetan. So instead of paying cash, this 15,000 worth bill is there now. Chetan endorsed this bill to Deepak. Now Deepak needs the bill amount before the due date of the bill. So he sold this bill to his bank. That is known as discounting the bill. He went to bank, he sold this bill to bank, and how much money bank paid? In question it is given that bill is discounted with 14,800. Means 200 rupees bankers have deducted in the form of discount and remaining amount 14,800 is deposited in Deepak's account. On the due date, bill is with whom? Bankers. So bank went to Bharat, bank presented the bill and Bharat honored the bill. Means Bharat paid 15,000 rupees to banker. So this is the question. Now he is asking us to prepare journal in the books of all the parties. So in Amar books, Chetan books, Deepak books, Bharat books, we have to prepare journal. In bank books, we need not to prepare any journal because bank accounts is a separate topic. It doesn't come under bills of exchange topic. First, journal of Amar. So from Amar's point of view, now we have to think and we should write the journal entries. In Amar books, what are the transactions? First, what happened? Amar received acceptance from Bharat. This is first transaction. Second transaction, Amar endorsed this bill to Chetan. Journal of Amar. Format, date, particulars, ledger folio number, debit, credit. In question, dates are not available now. So date column we open, but you need not to write any dates here. First is for receiving acceptance now. Why Bharat has given acceptance on a bill? Because previous to this acceptance transaction, what happened? Firm owner is Amar. Because in his books we are writing journal entries now. Amar sold goods to Bharat on credit. So what are the two accounts here? Amar sold goods to Bharat. Therefore, Bharat account is one account and from Amar goods are going. Therefore, goods account is another account. Bharat account is a personal account. With the person name we opened account now. Goods account is a real account because goods come under asset. Now, personal account rule is debit the receiver, credit the giver. Bharat is receiving goods, he is a receiver. We have to debit Bharat account. Real account rule, debit what comes in, credit what goes out. From the firm goods are going, therefore we have to credit. So goods word comes in four cases. In case of purchase, sale, purchase return, sales return. So for more clarity, instead of this goods word, transaction name we should write. So we sold goods to Bharat, no? Transaction is sale. Therefore, sales word comes. Final entry, Bharat account debtor to sales account, 15,000, 15,000. This entry, you need not to write in the solution. So to explain this first entry, I have explained this one. In our balance sheet, how this transaction appears? See, Bharat has to pay 15,000 rupees to us. So Bharat is a debtor. Debtor means asset. Asset shows a debit balance. Therefore, in balance sheet, under asset side, debtors 15,000. Next, what happened? Amar need a written proof for this 15,000 transaction. So Amar prepared a bills of exchange and received acceptance from Bharat. From Bharat, bill is coming. Therefore, bills receivable account is one account. Bharat is giving acceptance now. Bharat account is another account. So to Amar, this bill is bills receivable. Because in future on this bill, Amar is going to receive the money now. Bills receivable account is a personal account. Bharat account is also personal account. So for personal account, what is the double entry rule? Debit the receiver, credit the giver. But instead of using this formula, I will explain in another manner. So easily we'll understand that. See, in previous entry, asset side, in the name of debtors, we are showing this 15,000. Now what happened? On this debtor, Bharat, Amar prepared a bill. So, bills receivable, a new asset is created. Existing asset, debtor asset is cancelled and a new asset, bills receivable is created in the same place. So that we have to show in the journal entry. Asset shows a debit balance. So if you want to increase the asset, you have to debit that asset name. If you want to decrease the asset, you have to credit that asset name. Here debtor account I want to cancel now. Then how I created debtor account? By debiting Bharat account. If I want to cancel this debtor account, while writing the journal entry, I have to credit that Bharat account. That is why Bharat account is created. Then a new asset, bills receivable, now I want to create. So bills receivable is also an asset now. Asset shows a debit balance now. So if I want to create the asset account, nothing but if I want to increase the asset account balance, then I have to debit that asset name. That is why bills receivable account is debited. So this is the entry for receiving acceptance. This entry in the solution we have to write. So entry is bills receivable account debtor to Bharat account. 15,000, 15,000 bill value. Narration being acceptance received. Next what happened? Amar has to pay 15,000 rupees to Chetan. No? Chetan is a creditor. Why Amar has to pay 15,000 rupees to Chetan? Because from Chetan, Amar purchased goods on credit. What are the accounts in this transaction? To Amar goods are coming. Therefore, goods account is one account. From Chetan, goods are coming. So, Chetan account is another account. Now, goods account is a real account. Chetan account is a personal account. Real account rule, debit what comes in, credit what goes out. Goods are coming, so we have to debit. Personal account rule, debit the receiver, credit the giver. Chetan is giving goods, he is a giver, credit. Instead of goods word what to write? This is purchase transaction now. So purchases account we have to write. Final entry, purchases account add to Chetan account, 15,000, 15,000. Don't write this entry here. How this entry appears in balance sheet? Previous entry result is asset side bills receivable 15,000 is appearing. And this entry result is a new creditor is generated with 15,000 rupees. No? Creditor is a liability. Liability shows a credit balance. So liability side creditors 15,000. Next what happened? To Chetan, Amar has to pay 15,000. As a final settlement, Amar is endorsing this bill to Chetan. For that endorsement, now we have to write the journal entry. Amar has given this bill to Chetan. Two accounts are Chetan account, bills receivable account, 15,000, 15,000. How this entry is coming? As per this entry, a creditor is created. Now, Amar is giving bill to Chetan. So, this creditor will get cancelled now. How to cancel creditor account? Creditor is a liability, no? Liability shows a credit balance. If you want to increase the liability, you have to credit. If you want to decrease the liability, you have to debit. So by crediting Chetan account, we have created this liability, creditor liability. If I want to cancel, I have to write on opposite side, debit side. So Chetan account is debited. Why bills receivable is created? Previously, as per these entries, an asset, bills receivable is created in Amar's books. Now, to clear this creditor, bills receivable, Amar has given to this creditor. So, bills receivable is also will get cancelled. How we created bills receivable account? See this entry by debiting. If I want to cancel bills receivable account, I have to credit. Therefore, bills receivable account is created. So this is the entry for endorsing the bill. In solution, you have to write this entry. Chetan account debtor to bills receivable account 15,000. Being bill is endorsed. After that, what happened? Chetan endorsed that bill to Deepak. Deepak discounted the bill to bank. On the due date, bank received money from Bharat. In these transactions, Amar is not involved, no? So for this endorsement, for this discounting, for this honor, in Amar books, we need not to write the journal entries. So Amar journal is completed. Next come to Chetan journal. As we are preparing journal of Chetan, think from Chetan point of view. First what happened? From Amar, endorsement came. Next transaction, Chetan is endorsing this bill to Deepak. In Chetan books, first transaction is for endorsement from Amar. Second transaction is for endorsement to Deepak. This is journal of Chetan. So headings I am not writing because you will understand. In exam you have to write for every journal. Heading Chetan books. Think from Chetan point of view. Why Amar is endorsing the bill to Chetan? Because previous to this endorsement, what happened? Chetan sold goods to Amar on credit. So two accounts are there. Amar account, goods account. Amar account is a personal account. Goods account is a real account. Personal account rule. Debit the receiver, credit the giver. Amar is a receiver. We have to debit. Real account. Debit what comes in, credit what goes out. Goods are going. We have to credit. Instead of goods word, transaction name, sales. Final entry, Amar account debtor to sales account. 15,000. So in Chetan's balance sheet, a new debtor Amar is created with 15,000 rupees. Amar has to pay 15,000 rupees now. Instead of paying in cash, Amar has one 15,000 worth bill. He endorsed that bill to us. So from Amar, bill receivable is coming. For Amar, Chetan, Deepak and bank, this bill is bills receivable. So while writing journal entries in their books, bills receivable word we should write. To Bharat, this bill is bills payable. Therefore in his books, we have to write bills payable word. So these three members on this bill in future, they are going to receive the money. Therefore in these three persons books, while writing the journal entries, bills receivable word we should write. Bharat has to pay this amount now. Therefore for Bharat, this bill is bills payable, liability. Two accounts, bills receivable account, Amar account. In previous entry, Amar account is debited because he is a debtor. Now, same debtor asset is converted into another asset form, bills receivable. So this debtor account we have to cancel. By debiting, we have created this debtor. If you want to cancel, you have to credit. A new asset is created in the place of debtor, bills receivable. Therefore, bills receivable account is debited. Because asset shows a debit balance. If you want to create any asset, you have to debit now. This is a final entry. This entry you have to write in this solution. For receiving endorsement in Chetan books, entry is bills receivable account debtor to Amar account. Being endorsement received. Bill value 15,000. Next what happened? Chetan endorsed this bill to Deepak. For this we have to write the entry. First of all, why Chetan is endorsing this bill to Deepak? Because previously what happened? From Deepak, Chetan purchased goods on credit. So two accounts, goods account, Deepak account, real account, personal account. Real account rule, debit what comes in, credit what goes out. Goods are coming, debit. Personal account rule, debit the receiver, credit the giver. Deepak is giving goods, he is a giver, credit. Instead of goods word, this is purchase transaction, purchase word. Final entry, purchases account add to Deepak account, 15,000. So what is the result of this transaction? In balance sheet, this Deepak becomes a creditor now because we are buying goods from him on credit. We have to pay in future. Creditor is a liability. Under liability side, creditor, 15,000 is appearing. And as a result of this previous transaction, asset side bills receivable 15,000 is appearing. Chetan endorsed this bill to Deepak in full settlement. So after this endorsement, what happens? With him one asset is there, no bills receivable. Now that will get a cancel because it is endorsed to Deepak. Bills receivable we have to cancel. And we have given bill to him. Therefore, this Deepak liability is also cancelled. How we created this liability? By crediting Deepak. How we created this asset? By debiting bills receivable word. Now how to cancel? This bills receivable we have to credit. Opposite side we should write. Creditor, nothing but Deepak, we have to cancel by debiting. So entry for endorsement is Deepak account debtor to bills receivable account. 15,000, 15,000. Narration, being bill is endorsed. Next, Deepak discounted this bill with the bank. On the due date, bank went to Bharat and Bharat honored this bill. So for this discounting and for this honor, in Chetan books we need not to write the journal entries because he is not involving in these two transactions. Now come to Deepak books. Think from Deepak point of view. First what happened? From Chetan endorsement came. Next, Deepak discounted this bill with the bank. For these two transactions in Deepak books, we have to write the journal entries. So in Deepak books, first one, endorsement from Chetan. Second one, discounted with the bank. Journal of Deepak. Why Deepak received endorsement from Chetan? Because previously what happened? Deepak, firm owner, sold goods to Chetan on credit. So from Deepak, goods are going to Chetan. Two accounts are Chetan account, goods account. Chetan account is a personal account. Goods account is real account. So personal account rule. Debit the receiver, credit the giver. Chetan is receiving goods. He is a receiver, debit. Real account. Debit what comes in, credit what goes out. Goods are going now, credit. Instead of goods word, transaction, sales. Final entry, Chetan account debtor to sales account 15,000, 15,000. What is the result of this transaction? In Deepak balance sheet, from Chetan 15,000 should come now. Debtors under asset side 15,000 is appearing. Now from Chetan endorsement came to him. So debtor account is cancelled and this debtor asset is converted into another asset known as bills receivable. Therefore, bills receivable account we should debit because asset shows debit balance now. To create any asset we have to debit. And this debtor account, how we created in previous entry? By debiting Chetan we have created this. To cancel, Chetan account should be created. So this is a final entry for receiving endorsement. In Deepak books, bills receivable account debtor to Chetan account 15,000, 15,000. Narration, being endorsement is received. Next what happened? Deepak need the money before the due date. So Deepak went to bank and he sold the bill to bank. From Deepak, bill is going to bank. 15,000 worth bill. Bank deposited 14,800 in Deepak's account. So bank balance is increased by 14,080 and 15,000 worth bill is going from Deepak. Instead of 15,000, only 14,800 came. Means this 200 is what? Discount allowed by Deepak. In Deepak books, these three are the accounts. Now bank account is a personal account. With any organization name, if you open any account, that is personal account now. So bank we wrote here because we are students. We don't know the bank name. But when you really work in this organization, instead of this bank word, one bank name we write now, SBI account like that. So with the organization name, we open this account. Therefore, bank account is a personal account. Discount allowed account, loss no, nominal account. Bills receivable account, personal account. For these two, we can apply double entry rules. So bank balance is increasing, means bank is a receiver. Personal account rule, debit the receiver, credit the giver is applicable now. Bank account we should debit. And a nominal account rule, debit all expenses and losses, credit all incomes and gains. Discount allowed is loss, therefore debit. Next come to bills receivable. See, now debtor is not there because as a result of this entry, asset is created. Next what happened? We received acceptance from Chetan. Therefore, this debtor is cancelled now. And in this place, a new asset, bills receivable is created because of this transaction. Bills receivable value is also 15,000. And now what happened? This bill, Deepak discounted with the bank. Now, with the Deepak, this bill is not there. So this bill we have to cancel. How we created this bill? By debiting. If you want to cancel this bill, you have to credit now. That is why bills receivable account we have to credit. And this bills receivable asset is converted into bank asset. So instead of bills receivable, now another asset, cash at bank with a 14,800 we have created. That is why bank account is debited. So this is the final entry for discounting the bill. Bank account debtor, discount account debtor to bills receivable account. Bank balance is increased with the 14,800, discount amount 200, bill value in credit column 15,000. Now come to Droy's books, Bharat books. First what happened? From Amar, one bill came for acceptance. Bharat has given acceptance on that. Next what happened? On the due date, bank came to Bharat and Bharat honored the bill. For giving acceptance one entry, for honor another entry. In Bharat books, for acceptance given to Amar first entry, for bill is honored another entry. Heading Journal of Bharat. First, why Bharat is giving acceptance to Amar? Because previously what happened? From Amar, Bharat purchased goods on credit. Goods are coming from Amar. Goods account, Amar account. Two accounts are there. Goods, asset no, real account. Amar account, person name no, personal account. Real account rule, debit what comes in, credit what goes out. Goods are coming, debit goods account. Personal account rule, debit the receiver, credit the giver. Amar is a giver, credit. Instead of goods, transaction. This is purchase no, transaction name is purchases account. Final entry, purchases account add to Amar account, 15,000, 15,000. Now from Amar, we purchase goods on credit. So Amar becomes a creditor. Therefore, in balance sheet under liability side, creditor 15,000 is appearing. Now, Amar needs a written proof for this transaction. Therefore, Amar prepared a bill. He presented that bill to Bharat. Bharat accepted that bill. For Bharat, this is bills payable, no? So from Bharat, bills payable is going. This was happened. What is the end result of this transaction? Previously, in balance sheet, 15,000 creditor liability is appearing, no? Now, this creditor liability is converted into another liability known as bills payable. So, this creditor liability we have to cancel. How we created this liability creditor? By crediting Amar account. If you want to cancel this liability, we have to debit Amar account. And in the place of creditor, a new liability, bills payable is created. Liability shows a credit balance. If you want to create any liability, you have to credit. So bills payable liability we want to create now. Therefore, bills payable account we have to credit. So this is a final entry for giving acceptance. So as a result of this, what happens? Creditor liability will get converted into bills payable liability. This is a final entry for giving acceptance. Amar account debtor to bills payable account 15,000, 15,000 being acceptance given. Next what happened? Bharat has to honor this bill no, on the due date. So on the due date, Bharat paid money to banker. With Bharat, asset side, cash balance 15,000 is there, assume. Then when he honors this bill, this cash will get cancelled, no? So how this asset is created? By debiting. If you want to cancel, you have to credit. That is why cash account we should credit. Otherwise, apply our regular double entry principles. Cash account is a real account because cash is asset. Real account rule, debit what comes in, credit what goes out. So from Bharat, cash is going. That is why cash account should be created. This bills payable liability is also cancelled now. Because we paid 15,000 rupees to banker, no? Now this liability is not there. How we created this liability? By crediting. If you want to cancel, you have to debit. Therefore, bills payable account you have to debit. So final entry is bills payable account debtor to cash account 15,000, 15,000 being bill is honored. What is the end result of this entry? Cash is not there with us because we paid 15,000 rupees and the bills payable liability is also now cancelled because we have cleared that liability. In all parties books, we have written journal entries. So this is the end of present problem. Now take a screenshot of all these journals. See, this working notes, you need not to write anywhere. To explain, I wrote all these points. From here, solution starts. Journal of Amar, Journal of Chetan. Take a screenshot of these two. Continuation, Journal of Deepak, Journal of Bharat. This is the end of present video. Hope this video is helpful to you. Thank you.